Thanks for taking a look at our monthly cattle on feed update here on Friday. Here we do have the report. This is May 20th. We do have this report from USDA called Cattle on Feed. This covers only the supply portion of the beef world here. And we've kind of titled this one, at least, our little webinar, Rising Supply and Falling Demand. So while this report only covers supply, which in the upper left-hand corner you can see a picture of a feedlot, for instance, here. The bottom right-hand picture right now is equally important right now, and that is the demand issue here, or the lack of grilling season for this beef market right now. In terms of numbers, we have three numbers that the trade watches. Number one is on feed. That's a total count of all cattle that are in feedlots, whether they will be marketed here next week or 4 months from now. They are simply called on feed. The next one is in placements. So we put new calves and feeders into the feedlots during the month of April. And then the third group you see there is marketings. In this case, these are numbers which are marketed out of feedlots in the month of April here. So bottom line, as far as the trade guests in Allendale, mostly we are in the same mindset here for most of these numbers. Certainly on placements, the trade looks for 4.3% higher placements in April than last year at this time. Allendale is very close to that. We expect a 4.5% increase in placements. It's not too much of a big jump there at all. These are kind of consistent with the last few months here. Marketings, so the number of market-ready cattle which left feedlots, we're both more or less similar on our numbers here. The trade looks for 3.6% smaller numbers. We're looking for 2.7% smaller numbers here. Now, we will cover placements here first because this is generally the category most people watch on this report. For placements, we must consider that during April, which today's report certainly qualifies for, during April, we were just coming off those record highs. In fact, that was posted in the first full week of April, that large 124 average cash cattle price. So we must keep in mind that the first half of April, everybody in this entire market was bowled up, excited, and we are still seeing active placements. In addition to this enthusiasm, we also have to note that the southern plains were still in the midst of their drought. So we saw quite a few of those young stocker cattle, which normally would go on grass for a few months during the summer. Most of those were actually taken off grass and still put into feedlots here. So we had quite an incentive to have high placements. In terms of this report, as I mentioned before, you're looking for just a little over a 4% increase for the month of April, as shown by this red dot here. And as you can see here, there's been quite a few months in a row of higher placements. In fact, we've had higher placements in every month since August. The only one which that doesn't qualify for is actually February, but that one was only a 0.4% decrease. So bottom line here is large placements from August all the way to current should mean that we have higher slaughter numbers coming from all the way through all of summer. And in terms of marketings, which are numbers coming out of feedlots, that's about the case here. As you can tell, this chart kind of turned really during the month of August and really kept consistent, actually starting with November as well, with higher marketings. We must point out that this April number, which is lower, this is kind of off balance by a one marketing day difference compared to last year at this time. That actually changes the marketing number by about 3%. Total cattle on feed, we expect it to be about 5% higher than last year. As I said before, the trade expecting about a 6.5% higher number than last year. Bottom line, we're both certainly all agreeing that we do have higher numbers in the feedlot right now, and these will all be bulked up for the bulk of these numbers will be coming out during summer. Now, as I mentioned about this summer placement issue here, because we had those large placements back in, specifically, in fact, during the month of December, where placements were up 17%, those numbers will hit from late May through July, in fact, into early August. So we're just now at the cusp of seeing these extra numbers here. And that is shown by this beef production chart. This is a quarterly chart of Allendale's beef production estimates. For the second quarter, which we're currently in, we expect a 4% increase in beef production. Higher numbers will remain with us, 3% higher. So the numbers we're looking at for placements during August, or I should say during April, they will be marketed mostly during September and October as well. So bottom line, we do have higher numbers plugged in, as you can see, for the second and third quarter. As we expect such a sharp drop in available calves and feeders now, we do expect placements to fall here in the coming months, and therefore we expect a sharp tightening in supply coming in the fourth quarter, as you can tell by this 4% decline, as well as the first quarter of next year, shown by this 5% decline for 2012. Now, we aren't going to actually go into too much detail on this demand issue here, but I simply wanted to point out this chart, which may be of interest to some people here. This is a chart of high temperatures for the city of Chicago here for, in fact, since April 15th. More or less when you can say the grilling season more or less is starting here at this point. Whether you're grilling or not on April 15th is not the case. Keep in mind these are when orders will be placed for about 3 weeks ahead of time by the end users. So main point here with this chart is simply to show that most of these days here in the past month or so, we have had lower than normal temperatures here. So while this report coming on Friday is certainly a supply-only report, we must also characterize this report as coming in the time of a weak demand environment. One other report, actually, which will be released on Friday as well, we just want to throw a chart in here is a cold storage. This covers stocks of food items throughout the U.S., and keep in mind this also covers beef as well. Main point we're gonna talk about here is this, the fact that end of March stocks, shown by the red triangle here, were a large 64 million pounds over last year in the same period. Due to this supply issue here, and certainly with the demand issue here plugged in, we expect that that discrepancy with last year to increase. Even though the net number of beef in storage will decline, we expect the discrepancy to last year to increase. We expect going from 64 million pounds higher at the end of March to increase up to 71 million pounds higher than last year at the end of April. So certainly as a bearish issue we've got to keep in mind here, and these numbers are kind of conservative. It may actually be a little worse than that here on Friday afternoon. So little review here with placements rising a little bit. As we said, 4.3% is the average guess. Marketing's in April because we had one less marketing day. May be a little smaller here. The trade is expecting about a 3.6% decline. We do expect on feed to rise slightly compared to last year, now at 6.5%. And as we said before, the bulk of these extra numbers will be marketed during summer. This is a summer supply issue. You can argue maybe reaching into late summer here. But bottom line here, this is certainly a problematic supply picture for summer coming at the same time as heavy demand. So with that in mind, you can give Allendale a call here, find out our new revised price projections. These are available to subscribers as well as brokerage clients. So we'd be happy to get contact with you and then go over those. 1-800-262-7538. Thank you.